And the question is, when you buy a piece of real estate, what is it about that piece of real estate that generates capital growth, that holy grail that we're all hoping to achieve when we take on property investment? Is it the qualities of the property itself? Is it the price that you bought it at? You bought it well, maybe, giving you some instant equity. Is it the street in which you bought it? Is it the time in the cycle in which you bought? Or is it the broader location? And my argument that I'm going to put to you tonight is that it's the broad location. And I'm going to explain why that is so and what I mean by location, because I'm not talking about the street and I'm not talking about the suburb. I'm talking about something a little bit bigger and broader in terms of location. Media loves to tell us about, hey, these are the best 10 suburbs to buy in Brisbane or Sydney or wherever. We don't believe in that concept. We don't believe there is such a thing as a best. Yeah, sure. Is that better?
Yes, amazing.
I am a noted low talker, I have to admit. I was just making the point that media loves to publish their top 10 lists of these are the best 10 suburbs to buy in, and we think it's bunkum. We just don't believe in this concept of best suburbs and best streets. We believe in location, certainly, but it's about something different. So I'm going to talk about the reality that there is no Australian property market, a point that Matt made earlier. Real estate is very local in nature. There are, as he said, literally thousands of different markets across Australia. It's all about the local economy, and I'm going to spend quite a bit of time talking about that because it's really important to understand that real estate markets are about local economies. And then we're going to talk about the elements of a strong location, what we call our empirical formula that we use to decide whether is this a place that we would recommend to our customers as a place to buy. Then a couple of case studies and some tips for the rest of this year and beyond. But first, I'd like to give you some interesting tidbits of information about real estate. There's some absolutely extraordinary numbers coming out of real estate markets at the moment. For example, the Australian Bureau of Statistics, every 3 months, they publish their figure, their estimate of what the total of Australian household wealth is. And the figure they've come up with most recently is $17 trillion. Now that's a number that I imagine doesn't mean anything to anybody. It's 17 with lots of zeros, and I'm not sure how many zeros in 17 trillion. What's important is that it's grown for the past 7 consecutive quarters. And even more importantly, I think, is that 2/3 of that household wealth resides in residential property. What that means is that 67% of all the wealth in Australia is actually your home and any investment properties that you might own. And the total value, according to the Australian Bureau of Statistics estimate of residential property in Australia, is just over $11 trillion. And again, a big number that means nothing, but 5 years ago it was 7 trillion and now it's 11, which means that in 5 years it's grown by more than 50%. CoreLogic every 3 months publishes a thing they call the pain and gain report, and what they're looking at, they take the most recent quarter for which they have full figures. In this case it's the September quarter last year, 95,000 property transactions across Australia, and they examine whether the vendor, when they sold, actually made a profit. Did they sell for more than they actually paid when they bought the property 3 or 5 or 10 years earlier? And what they found in the most recent analysis is 95% of residential property transactions actually made a nominal profit for the vendor, and those gains totaled almost $34 billion. The median gain is about $300,000, so the average person who sells a property in Australia are selling it for about 300 grand more than they paid on average. Houses tend to make more profits than units, but let me tell you, that's changing very, very rapidly. That old dominant paradigm that always existed in real estate, that houses on land always outperform units for capital growth, that's changing big time as more and more buyers, more and more buying cohorts are opting for apartments, for attached dwellings, as a preference for all kinds of reasons, not just for affordability. So if we're having a look at this slide and say years' time, the gap between houses and units in terms of profits will be closing, and regional markets show better profits than capital city markets, which is another truth that tends to contradict some of the old beliefs in real estate, that you've got to buy in the biggest cities to get the best growth, that you've got to buy close to the CBD to get the best growth. All of it's not supported by the evidence. What we've seen in the last 5 years is regional markets have actually outperformed capital city markets big time. In fact, figures just out this week from CoreLogic showed the best locations in Australia that have recorded the biggest growth over the past 5 years. The top 10 were all regional. Of the top 20, 18 were regional, and the overall figures, regional markets grew, I think 54%, and city markets 34%. That's quite a difference. Regional markets are massively outperforming city markets over the past 5 years. Now this is one that the politicians really need to take notice of. What does it cost these days to build a house and land package? One of the things that underpins the value of existing property is the reality that it costs so much in this country to actually build new dwellings. And it's one of the reasons why we have a housing shortage in Australia. The industry, in many cases, isn't building projects, whether they be house and land package projects or apartment developments, for which they have approval, because the numbers just don't stack up. The costs of construction are so high. The median lot price in our capital city is now over $400,000, and in Sydney it's over $700,000. And the typical price of building a house, your standard boring brick and tile house on that very small block of land, is now almost $540,000. So if you add those two figures together, it's almost $950,000 now for the standard house and land package. We're getting scarily close to the point where it costs $1 million to build your standard house and land package on a very small block of land. And there was a report out this week that confirmed what we already knew, that up to 50% of that cost, that almost $1 million to build a house and land package, is actually taxation. So next time you see a politician standing up in front of the cameras and talking about how much they care about affordability and how much they want to fix the housing crisis, they're lying basically, because they're the problem. Their taxes, fees and charges are the reason why it costs $950,000 to build a house and land package these days. The housing shortage in one slide, these figures comparing 2015 with 2023, show why we have a housing shortage. The national population has grown by 3 million in those 8 years, but homes for sale has dropped 36% and homes for rent has dropped 58%. That's the housing shortage in a nutshell. And has it got any better since 2023? No, it's actually got worse. Vacancies have tightened, the shortage has got more acute. The federal government says it's going to build 1.2 million homes in 5 years, but I don't think anybody believes it's even possible. Australia's never built that many homes in any 5-year period, and right now the housing industry, the building industry, doesn't have the capacity to actually build that many homes for all kinds of reasons. Shortages of tradespeople, the fact that builders are going broke at the rate of 9 per day, would you believe, across Australia. 3,200 building companies went broke last year, partly because of high interest rates, partly because of the high cost structures that are built into the system, the high taxation, the length of time it takes to get approvals. The shortage that we have is kind of rusted on, and what that means is there's going to be continual upward pressure on rents and prices, and that means for property investors opportunity. And vacancies continue to be stuck around about 1%. A balanced market would be 3 or 4%. There actually has been no point in the last 20 years in which Australia has had vacancies as high as 3%. We've had a very long-term shortage, and right now it's in catastrophic proportions, around 1%. Many parts of Australia much less than that. Continual upward pressure on rental. Bad news for tenants, but for property investors, it represents opportunity. Okay, so turning to the main thing I want to talk about tonight, it's about location and the reality that there is no Australian property market. Economists love to talk about the Australian property market. They talk about what's going to happen this year with Australian property prices, and they'll make a forecast, usually a negative one. The last couple of years, the forecast, the Australian property prices were going to fall a lot, 10 or 15% in both of the last 2 years. Obviously, they got that wrong because they think it's all about interest rates, and it's not. But the concept of an Australian property market is fictitious. We have literally thousands and thousands of different property markets. Good real estate is local in nature. Just to show just how many differences there are in Australian real estate, just looking at the 8 capital cities, we've got like 4 different situations. We've got boom markets, Perth, Adelaide and Brisbane in the last 12 months. We've got markets that have had moderate growth, and that's Sydney and Hobart. A couple of markets with no growth at all, Canberra and Darwin, and then we've got Melbourne where property prices have fallen. And if you look across regional Australia, you'll see those same differences. It's a 4-speed market. Boom markets, moderate growth, no growth, falling prices. And it's like that every year. I've never known it to be different. We've never had a year in which everywhere in Australia was booming. We've never had a year in which everywhere in Australia was struggling with prices falling or not growing. It's all very local. Regional markets, very similar. It's been all about Queensland, Western Australia, South Australia, moderate growth in New South Wales and Tasmania, nothing in the Northern Territory. Now, if we look at unit prices, the same pattern. That's been very much the Brisbane, Perth and Adelaide story, but when we look at the regional markets, the Queensland leads, and that's primarily because Queensland regions include the Gold Coast, which has a very strong unit market in recent times, the Sunshine Coast, which is making a major comeback. But again, some boom markets, moderate growth, no growth, and regional Victoria falling a little bit. That's the norm. It's all very local. Another illustration of that, if you read the generalised figures, you'll believe that there wasn't any growth in the Sydney market last year. Prices, on average, grew about 2-3% in the Greater Sydney area. But within Sydney, there's all these markets where prices were booming. Canterbury, Bankstown, some of the suburbs there in the Canterbury, Bankstown local government area, up by more than 15%, some more than 20%. And the last 3 suburbs there in the Bayside local government area, all up 10-15%. In a city where overall prices hardly moved at all. And the secret about success in real estate is finding those local markets which are outperforming the norm. That's what we do at Hotspotting. It's about identifying the outliers, the outperformers, the markets that are going to outperform the norm. And we do that by understanding what it is that drives prices upwards in those locations. Now this comes from a real estate analyst called Simon Presley of Propertyology, a guy that we know well and we respect a lot what he does. You could do a lot worse if you want to be better informed about real estate by getting on his mailing list. It's free to receive his newsletters, and he has these wonderful infographics. And this one talks about location and what is it that drives capital growth. He says that the purchase price is almost negligible, about 2% of the capital growth. He says the street selection is maybe 8%. It's not so important what street you're buying in. Matt might disagree with that, but in broad terms, it's not about the street, it's not about the suburb. The asset itself, well, that's maybe 20% of, if you buy a brilliant property, it's going to help you get capital growth, but if it's in the wrong location, you're not going to be thrilled with the capital growth you get. 70% of it comes from what he calls the city selection, the broad location, the town, the city, the local government area in which it sits. That's the important thing to get right. And when it comes to getting it right about location, it's all about the local economy. Now we have location reports on the markets that we rate across Australia. We don't have a report on every location because a lot of places just aren't worth, we think, investing in. So we have about 130 locations, and we do our reports on local government areas because we think it's about the broad location. It's about clusters of suburbs, all influenced by similar factors. And if you get one of those reports, it might be 10, 15 or 20 pages long, lots of graphs and charts and tables of figures and lots of words explaining what it all means, lots of infographics. But only about 4 or 5 of those 15 or 20 pages are devoted to what's happening right now in that property market. The rest, the bulk of it's all about the local economy. Is it growing? Is it creating jobs? Is the infrastructure spending? And that's what's important. And quite often we're recommending an area where the current property market is actually doing pretty much nothing, or maybe even prices are falling. And people sometimes say to us, why are you recommending this area where prices are falling? We say, because what's happening in that economy tells us that it's going to change and there's going to be growth in the future. About 2021, our number one pick for Australia was the Sunshine Coast, and at that time, that market had not performed for 10 years. And people challenged us and said, why are you recommending a market that has shown no growth for 10 years? And the answer was, it's about to change big time. And the reason why it was changing was $20 billion worth of infrastructure spending that was coming into that market. And very quickly it became the national leader on price growth for the next 2 to 3 years. Similarly, 4 or 5 years ago when we first started including Perth in our reports, Perth prices have been falling for 10 years and people challenged us on that as well. Why are you recommending a market where prices have been falling for 10 years? And the answer was because it's about to change, because of what was happening in the economy in Western Australia and in Perth. And it did, it became the boom market of Australia over the last 3 years. Although I should point out that if you're thinking about Perth, that particular ship has sailed. All the indicators tell us that that market has passed its peak and is starting to fade. Better places to put your money. But it's all about the local economy. And again, our friend Simon, we have a weekly newsletter we put out to our database every week called The Week in Real Estate. And we have a quote of the week, and a couple of weeks ago, this was the quote we used, Simon saying, the single biggest important component for property market performance is always local economic conditions. And we agree with that 110%. And all our reports are based on that one simple principle. It's all about the local economy. And so what you have to do is find those economies that are dynamic, that are diversified. That's an incredibly important word. Not a one-horse economy, but one that's got lots of different sectors strong, creating jobs, infrastructure spending. And yes, it's all very local. I'll skip over that because we've made that point. Just to emphasise the point of the locality of markets, how it's all about local economies. CommSec puts out this thing called the State of the States report every quarter, and we follow it religiously because it's a great clue as to where we're going to see growth in property markets. For the last 2 years, pretty much every edition of that report has found that South Australia, rather surprisingly, has been the number one or number two economy in Australia. It's always been number one or two for the last 2 years. A lot of people are surprised by that because not many people think about South Australia as a strong growth economy, but it is. And not coincidentally, Adelaide's been one of the best cities in Australia for property price growth in the last 12 months, and indeed for the last, well, several years. The Adelaide market just keeps on rising. It's 5 years of growth, still showing no signs of slowing down, although it must inevitably do so soon. The other market, the other state economy that keeps showing up as very strong, of course, has been Western Australia, and it's been ranked alongside South Australia as the number one or number two economy for the last couple of years. And not coincidentally again, the Perth market has performed massively in terms of price growth. Although I have to tell you that 6 months ago, those numbers were all above 20, and now that they're coming down month by month, and the last couple of months there's been no growth in Perth prices at all, which is a further indication that that market has passed its peak and is starting to fade. So, as I said, we're more interested in the economy than the current property market. We don't care what's happening in the current property market and a location that we'll recommend. It's all about the economy, and is that going to generate price growth in the future? And those are good places to buy in, incidentally, because the markets that investors seem to want to pile into, is because most investors are herd animals, is the ones that when they read there's a boom on, they want to pile into Perth after 3 years of growth. They should have been there 3 years ago. The good markets to be in are the ones that maybe right now are, just early in the cycle. Maybe they've had 1 year of good growth, or they haven't had any growth recently, but you have reason to believe that they're going to perform in the future. Those are the ones that we think people should be looking at. So we're looking for economic strength and diversity. So we're never going to recommend a mining town. It's just one thing that props up that economy, and it's very volatile and it's very high risk. So never a mining town. We seldom recommend a town where the whole economy is based on agriculture. That's also very vulnerable. If there's a drought, for example, that's going to negatively impact the local property market. A tourism town along the coast of Australia, the incredibly long coastline, there's all these gorgeous little towns where the economy is pretty much about tourism, and that makes those property markets very volatile and vulnerable. So we want diversity in the economy. We want 4, 5, 6 different sectors that are propping up the local economy and therefore the local property market. Jobs are being created. Existing amenities and infrastructure are good, but the big thing, and Matt referred to it, and we believe this wholeheartedly, the big thing is spending on new infrastructure. Nothing generates growth in a property market more than that. Lifestyle features can be important, but essentially what we're looking for is change, something that's different, that's going to transform a market from a moderate performer to an outlier, an outperformer in years to come. And real estate is changing constantly. I mentioned that the change in the dominant paradigm that houses always outperform units, that's changed massively. I'm not sure if you know this number, but last year in Australia, units outperformed houses on price growth in 60% of suburbs across Australia. And in Brisbane, it was 87%. That paradigm has changed massively. The trend we call the exodus to affordable lifestyle, people leaving the big cities and moving to regional areas, that's a huge change that has occurred in recent years in Australian property markets, and it remains a huge factor. As I showed you earlier, regions are outperforming capital cities. So we have a kind of a formula that we apply to a location to help us decide whether we're going to recommend it to our customers and clients. We call it the empirical formula. Empirical evidence is evidence based on actual experience rather than theoretical. And it's an acronym, so each letter of the word empirical stands for something. The E is for economy, and we've talked about how important that is. We like a certain market size, a certain number of sales in the year. We don't want to recommend people buying in small markets, which can be very volatile. Population of a certain size, maybe 30,000 and above. Infrastructure, incredibly important. Nothing generates growth in real estate markets like infrastructure. It generates economic activity, that generates jobs, and that leads to demand for real estate. And some types of infrastructure are more impactful than others. If you build a new motorway, lots of jobs in building it, but once it's finished, there's virtually no jobs in running it. But if you build a hospital, there's thousands of jobs in building it, but double the number of jobs in actually operating it, so the impact is lasting. And I'm going to talk about that a bit more in a moment, because I think it's a really good thing to follow. Where are they building the big hospitals in Australia? Universities are similar, lots of jobs in building them, even more jobs in running them. Increasing employment is important. Affordability. Not every investor is at the affordable end of the market. We find that maybe, I don't know what percentage, a very large percentage of investors, because a lot of investors starting out are young and they can't afford to spend the big bucks, so they're looking to buy in maybe the 400,000 or 500,000. So affordability can be a major factor in the areas that we recommend. And of course, low risk again. We're not recommending those one-horse town type economies like mining towns or tourism towns. The extraordinary impact of hospitals. $1 billion hospital, there's probably 3,000 or 4,000 jobs in building it. There's something like 6,000 or 7,000 jobs in operating it. And when you get something like this in the midst of say a regional city, it can have a massive ongoing impact and transform that property market. That, more than anything else, changed the Sunshine Coast from a large tourism town with an underperforming property market into a national leader on capital growth. $2 billion hospital, EGSCUH, that stands for Sunshine Coast University Hospital, part of a larger $5 billion medical precinct, which is still a work in progress. But 6,000 people work in that thing every day. People have come from all over Australia, and in some cases from other parts of the world, to live on the Sunshine Coast and work in that facility. Many of them are highly paid medical specialists. It absolutely massively pumped up the Sunshine Coast property market, particularly the top end. And so we saw markets like Noosa and Sunshine Beach have ridiculous capital growth, like doubling in 2 years, as a result primarily of that hospital. So it's not a bad strategy if you're looking for a very simple formula to identify as a place where you're going to target to invest in real estate, to find the places where these big projects are happening, because there's lots of them happening around Australia right now. And many of them are multi-billion-dollar projects. Toowoomba's got one that's just starting, Bundaberg also, a little bit north of here, not far from here, in the Coomera precinct. There's one, there's a couple in Sydney, but they're right across Australia of different sizes, $300 million projects, $600 million projects. The really big ones are measured in the billions of dollars, and their impact on property markets is absolutely immense. So it's a good one to follow. Now, in terms of case studies, because it's a great case study, and also because that's where we are, I thought I'd talk a little bit about the Gold Coast, because it is a great example of an economy that's got all the things I've talked about, contrary to what some people might think on the outside, that the Gold Coast is just a tourism economy and therefore it's weak and vulnerable. It's a lot more than that. It's now our largest regional city. It's bigger than many of our capital cities, and it's got serious critical mass. It's got a big education economy, for example. There are 3 separate university campuses on the Gold Coast. There are 5 or 6 TAFE campuses. Education is a huge element of the Gold Coast economy now. Obviously, construction is huge. It's a big medical economy. So it's taken on critical mass, and it's got strength and diversity. And it's expected within, say, 15 years to have a population of 1 million people. So it's going to rapidly become one of the biggest cities in the country. The stats show that this trend I talked about, the exodus to affordable lifestyle, where people are leaving Sydney and Melbourne and moving to other parts of Australia, particularly regional areas. The Gold Coast is the #1 destination. It's the most searched destination of any in Australia. One of the top 2 destinations for capital city residents moving to the regions. We talked about how important infrastructure is. The last time I tallied it up, $63 billion worth of projects under construction or in planning for the Gold Coast, easily the largest program for regional Australia. Really important factor.
Sorry, what's the other one? What's the other regional with the Gold Coast, the top 2?
I knew someone would ask me that, and I thought, do I know the answer? I actually think it's the Sunshine Coast, from memory. Yeah. I mean, Queensland benefits from internal migration more than any other part of Australia. When Australians move around, more of them are moving to Queensland than everywhere else. There's this kind of perception that we have a great climate up here. I'm not so sure that's true, particularly not recently, but it's lifestyle, it's climate, it's also affordability. Queensland's got this wonderful array of affordable regional centres with growth prospects, Rockhampton, Mackay, Bundaberg, Townsville, Cairns, Toowoomba, which is a great place to consider. Really like Toowoomba as a destination. Queensland's got that more so than any other part of Australia. That's one of the reasons why so many people move here. But the top 2, Gold Coast and Sunshine Coast, I think. Gold Coast economy is growing and is projected to keep on growing at well above state averages and national averages. Lots of big projects underway under that big infrastructure spend. The light rail project, I think it's up to stage 3, the Coomera Hospital, the Coomera Connector, desperately needed, with the beginnings of replicating the motorway. By the time they finish it, we'll need an M3 as well as the M1 and the M2, but they will keep chasing their tail on that one. And there was a report came out a few months ago which projected that at recent growth rates, if the Gold Coast continues with those price growth rates, it's going to end up with a median price of $2.6 million for houses in 2030. That's not that far away. Does that sound believable, Matt? Yes. Extraordinary, isn't it? That means it'll be higher than Sydney, which it'll be, on those terms, the most expensive city to buy real estate in Australia. If anybody owns real estate on the Gold Coast right now, you can feel happy about that prediction. Your property's growing in value at 7% a year, then it'll double in value in 10 years. So if it's growing at 15% a year on average, it's going to double in 5 years, which is extraordinary. It's one of the best capital growth averages in Australia. And of course, vacancy rates are incredibly low. Some of them as low as 0.4%. That's for the different postcodes that make up the Gold Coast. Some of the growth in the last 12 months, just a random selection of suburbs around the Gold Coast city. Median house prices, all of those examples are up by more than 15% and most of them up by more than 20% at a time where nationally the prices are growing on average about 3, 4, 5% depending on whose figures you believe. So extraordinary growth happening in this market at the moment, but also in the unit markets, all of those examples are above 15% for the last 12 months, according to PropTrack figures. And yeah, there's another piece of information talking about the number of residents that Gold Coast is expected to very soon reach 850,000 and within 15 years reach 1 million residents. And all that's happening at a time where there's a shortage of supply. Many times in the past I've worried about the Gold Coast market because it did have a history of oversupply. Well, those days are long gone. It's now got the opposite problem. We have major developers with approvals to build high-rise on the Gold Coast not building them because the numbers just don't stack up because construction costs have become so high. So we've got an enduring shortage. And this chart, which comes from Michael Matusik, who's a Brisbane-based analyst who's been around even longer than I have, the red line is dwelling approvals. You can see how it's dropped since about 2021, and the grey line is actual building completions. You'll notice there's a gap between the two, and this is one of the reasons why we have a housing shortage in Australia. Media gets excited when there's an increase in dwelling approvals, and we recently saw headlines where they're saying, hey, the housing crisis is almost over. Dwelling approvals have risen by X. But dwelling approvals are irrelevant because so many of them aren't translating into actual construction. It's actual building commencements that matter. And you can see the gap between the two graph lines there. There's a big difference between approvals and actual to start to construction because projects are deemed to be unviable because of high construction costs. So since 2021, the Gold Coast market has been in serious undersupply, and there's no real prospect of that to be fixed anytime soon, which means we're going to have ongoing upward pressure on prices and rents in the Gold Coast region. Just wanted to have touch on one other case study, and I'm talking here about what we call second wind markets. Now across Australia there are lots of locations which had quite big price growth from 2020 to 2022, so 3 years of pretty strong capital growth. And then, as is natural in the cycle of real estate, the market went on pause mode and the graph for prices just flatlined, in some cases dropped a little bit. So the market sprinted for 3 years, paused to catch its breath, and now it's got its second wind. It's starting to take off again. So we call them second wind markets. And these are good ones to target because these are the places which are the market's currently not pumping. It's not busy and competitive like, say, Rockhampton or Townsville, where you try to buy in those markets, you're going to be competing with 15 or 20 other buyers for the same property, and you have to offer more than the asking price to win. These second wind markets are an opportunity to buy at current prices, or maybe even less than the asking price. So this one we did a report on recently, the Clarence Valley area in New South Wales. And it was a really interesting one because there's a good area level of affordability. It's got a growing population. It's a nice combination between hill change areas and sea change areas. That continues with further interest rate reductions. There's no doubt that investors are very active. Right from the start of this calendar year, it was really apparent in our business and others telling us the same thing, that people were really busy, investors with intent getting active this year. And loans to investors have noticeably risen this year. And then we have this big infrastructure spend, $500 billion in projects across Australia last year under construction, and that continues into 2025 and beyond. That's absolutely massive. It's unprecedented. It results from COVID and state and federal governments deciding how do we avoid recession? We're going to invest big time in infrastructure. So we've got all these massive projects underway, the Inland Rail Link, the new Western Sydney Airport, all those hospitals I talked about. It all adds up to $500 billion worth of infrastructure developments right now. and that's a huge generator of growth in real estate markets. We did some research of the whole of the country, and recently using 5 different metrics to rate the capital cities and the regional markets in Australia from 1 to 14. 8 capital cities, 6 state and territory regional markets. What came out of that? Brisbane number 1, regional Queensland number 2. So it's very much a Queensland story at the moment. Still good rankings for Adelaide and regional South Australia. Regional New South Wales, pretty strong. Darwin's the surprise one. That's one that hasn't performed in recent years, but more and more investors are interested in Darwin because it's the cheapest capital city. It's got by far the highest rental yields. Its economy is starting to improve, and there's quite a big infrastructure spend there. So that's one to watch. And the ones that aren't performing, Perth dropping down the rankings, that boom is over. Canberra sort of stuck in neutral. No one's interested in investing in Canberra, it seems, not surprisingly. And a few of the regional markets, like Tasmania and Victoria, still a bit weak. And finally, another quote from our friend Simon, and this is something to keep in mind. The best performed property markets in 3 years' time are probably flat today, and that refers to our concept of second wind markets, buying in markets that are early in the cycle or perhaps flat, but have prospects 3 years from now to be the national leaders, and that kind of change is happening all the time in Australian property markets. So what does it all mean? Well, it means opportunity. This country desperately needs new dwelling. The industry can't provide the number that are needed. There's no solution in sight. Vacancies have never been so low, and that presents opportunities for investors with foresight and courage to get out there and take advantage of that opportunity, because there is going to continue to be upward pressure on prices and rents inevitably with the shortage that we have and no solution in sight. If you'd like to contact us, email us best. If you'd like a copy of the slides, for example, email me and I'm happy to send it to you.